Hey, and a very good morning to everyone, and welcome to the January 22nd, 2021 Trigger Charts pre-market rundown. I'm Andrew Horowitz, and I am the host of this. I'm also the co-founder of Trigger Charts. Thanks so much for joining me. We are going to be talking about a lot of things today. We have a lot of stocks to discuss, and we have some things like Bitcoin. Put that in the ticker up to the top right to kind of start tracking that. We do this each and every Friday to give you some education information and an overview of what's going on with the market. So pay attention because we're going to talk about a lot of different things, setups, and how things look when you want to find those breakouts, breakdowns, those consolidations that may be looking like they could become a springing action for a new entry. Now, all the information we discussed today is for educational purposes only. It's not a recommendation to buy or sell any security. It's not a solicitation of any kind. So I want to make sure everybody's aware of that. See the disclaimers that are on the page right now. Also, during this discussion, I'll be happy to take on any questions that you have or look at any particular symbol. So put those over in the chat, probably down there on the bottom, maybe on the right, maybe on the left, somewhere. All of the indicators that we talk about today, whether it's the Commander series, the aileron, the altimeter, the radar, the KRI, are all available on the TradeStation trading app store exclusively right now for a 10-day free trial. So anything we talk about, make sure to check that out. It is fully usable, fully functional. There are no limitations on any of the actual indicators. So you could use them unrestrained for 10 days. So check that out. On the right-hand side of the screen, we have the Qs, the NASDAQ 100, which broke out to a new high yesterday, along with the S&P 500. Dow was just within a hair of record territory yesterday. But basically, we're seeing the continuation of this rally mode that we saw from the bottom in April. Now, a lot of you have been asking me the question over time, like, what is this all about? Like, why is this happening? Why are we seeing the speculation pretty much raising all asset classes? And I want to show you a table that I pulled up before we go any further, because I think it's really interesting. Let me collapse a couple things and see this. All right, check this out. I want you to pay attention. This is serious. Look at this chart right here. This is the U.S. personal income. Now, when I want to look at this, it goes back to January of 19 and takes in consideration all income sources that are available. And when we look at this, we look at, okay, what is the personal income in totality of the public that's making money, of course. Cares Act is the purple, and then the CARES Act, and we take the total of all of it as the red line overall. But we add like things like food assistance programs, lost wages, supplemental payments, etc. Basically, they were broken up towards the right. So for a while, all those were included, and then we broke them up towards the right to give you a little bit more of a drill down into what's going on. But notice, forget about any one in particular, any color. Look at the incredible move from the March 20th into April and May. This personal income went from about, let's call it, dipped down into the recession, of course, due to the pandemic. It dipped down to, let's call it 18.5. And then it moves up to the highest we've seen in history. And right now, still at this point, because of the PPP program, the unemployment compensation, the impact payments, the economic impact payments, and more is coming, by the way. We just saw 600 and the expectation of another 1,400. We are seeing right now personal income inside of a situation where we have 6.7, at least a 6.7% unemployment rate, close to all-time highs, and not, if not that, higher. Let's kind of draw a line on this, okay? Where are we now? We're right here, right? Where were we before? Well, we were right here. We are seeing this range from about, let's call it 19 to almost 20. So another $1 trillion of excess income is in the system right now. And if you're wondering, well, what does that mean? Well, that's what's going into the market on a regular basis because people have excess savings as well. People can't go out. They're not spending in some places. In some places, like here in Florida, everybody seems to just say the hell with it and they're just going out. But when you look at what is actually happening and why there is all this excess speculation, I think this has something to do with it. Doesn't that make sense? And now what's going to happen next? Next, we're going to get this, right? We're going to get another move higher because we are seeing that there is another $600 that is going to be pushed in as payments. We're going to see that kind of look at this here, that's going to be this area. Then we're going to see the supplemental payments go up again. We're going to see unemployment insurance from the CARES Act move up again. And we're going to see the PPP, and we're going to keep the unemployment insurance at a high level. So all this that is going on right now is helping to fund what you see on the right. Pretty much says it all right there. Well, let's give you a quick update of what's going on. We have a new administration, so welcome to President Biden and the team. Markets are looking like they need to settle in a little bit to what is exactly going to be the administration's overall direction. We had thought that it was going to be a green deal, right? So solars and green energy and EVs and everything was going to be great. We thought there would be maybe a rollback on regulations and banking would be a lot tougher. Gary Gensler is now the SEC chairman, and we have him. And if you remember back when he was the CTFC, CTFC, where he was the chairman of that, he was very, very tough. And we think that there's going to be potentially more regulatory oversight, a tougher SEC overall. Regulations probably coming. I think the two things that I've been thinking about, that the areas that I thought would be regulated and something's going to come down the pike, and we're starting to see that kind of flush out. I talked about this at the end of last year, is that we're going to see regulation on Bitcoin and cryptocurrencies potentially, as well as regulations on SPACs. At least there's going to be some mention of a review of what's going on in the whole SPAC universe that has been really hot. There's a lot of what ifs that are going on right now. A lot of people are asking questions. Are we going to have higher taxes personally and on a corporate basis? We're going to see that the tariffs are removed with China. We're going to see more of a globalization return versus not, where we had more of an isolationist type of situation under Trump. So a lot of things are being asked with the markets right now. I don't think that is any conclusive actions, but we do know one thing, that it does seem pretty obvious that even if there isn't a one, there'll be two or maybe even three stimulus programs. We're talking about the down payment that was approved, the $900 billion with the payments and increase in PPP and vaccine help, et cetera. We'll get another 1.9 trillion that's being discussed, which I think they probably will pare that back a little bit, but at least push out the $1,400 per person extra direct stimulus payment, as well as some help for vaccines and a few other things. Then where do we go from there? Are we going to have an infrastructure program? A lot of bets are being laid on materials. They're looking like this trade, which is I would call the reflation trade. The idea that we're going to see trillions of dollars to fix, the shovel ready. Just wait. Shovel ready is going to start coming into the vernacular of the discussions. That narrative about, hey, we got to fix the bridges, the railways, we got to have a better transportation system, the roads are crumbling, the tunnels and all that. That is going to be a big discussion after we get through this next level of initial executive orders, as well as the rollbacks initially, the Trump impeachment hearings in the Senate, of course, is going to take spotlight, and whatever they're going to do for the pandemic and to get this under control. From there, I believe that what they're going to do is start working on a massive infrastructure program. Is that good or not? I don't know. We'll see. But markets are surely thinking that is going to be really good. If you've looked at the price of copper, you've looked at the things like Freeport-McMoran, you've looked at steel companies, you've looked at that whole genre of concrete and builders, they are doing very well. So kind of an interesting situation. A couple other themes that are happening here. I've been picking up this whole, I don't know what's going on. I'm calling them the Reddit Vigilantes. If you've been following along with what's going on Reddit, in particular about the stock of GameStop, went from, it's going bankrupt. They haven't kept up with the times. The manager's a problem. We got some activists involved there. Stock shot up from, 8 or 9 to about 40-ish, 45. And one of the things that's happening is we see some major short sellers like Citron Research, who is Andrew Leff, who is pretty well respected in the industry. He says, hey, we're shorting this. This stock is going to 20. Usually what happens is a pretty good reaction on that. Well, we got now the Reddit Vigilantes that are going after Citron saying, hey, let's burn this guy. GameStop is wonderful. This stock is going to the moon. And you start hearing that. You start thinking, well, we know there's Bitcoin involved, and which is fine. But what they're doing is now trying to break him and bust his short. So if you look at what's going on with that, and let's kind of quickly move over to GME. Where is it this morning? up another $2.50 at 45.30. This move that we saw off of, if you go back a little bit, kind of started moving up at the $10, then the 15, and then this break off of 17 straight up, and now, which was clearly a flag pattern. And if you look at this pattern, it's very easy to see, right? You got this flag here. Question is, are we going to start to see that? And then, flag pattern usually has a continuation to the upside. So right now we are close to over the top 45 and change. Got to get past 45.50. We tried to short a little bit of this and just kind of buzzed out of it yesterday, saying, you know what, when it was down 6%, they immediately started picking it up. The chat boards over on Reddit continue to get a little bit crazy about it. But we wonder how many other stocks are seeing that kind of pump. And if you're wondering again on where the money's coming from and then what they're doing with it, it's playing at home with the pump. You start getting a significant following on Reddit and one of the subreddits, and you get this kind of pump going on, which there should be some regulations on there too, because there are none for holdings and what you're doing. And you don't even know who the players are that you are actually going with. A lot of people think people on Reddit are all individuals, and what they're doing is just buying stocks and selling stocks and, going into various things. But maybe they're actually bots, or who knows, they could be other players that have a lot of money in the market that are using this platform to just pump and dump. But nobody seems to care anyway, because it's all about just going to the moon, right? Moonshots and all of this. The economy is still on life support. We know that. They are kind of going through the process of trying to get our jobs back from a 6.7% theoretical level with no inflation to speak of, which is not the case when we look at the real numbers. But yet the Fed is committed to keeping the interest rates at 0% approximately till about 2023. And that right now they're pumping in about $120 billion a month between bonds, municipals, et cetera, into the quantitative easing program. And that is also creating incredible amounts of liquidity in the market. Basically, what people are doing is buy first, ask questions later. But not you, because you're educated in the area of where we can really get our greatest opportunities. And while we'll be very happy to follow along if, in fact, we see a breakout to the upside or the downside that makes sense, utilizing some very good tools based on volume and price, well, we'll play along. It's fine. What we saw yesterday was interesting. We've seen this a couple of times recently. Everything was kind of moving into a very broad-based rally. All of a sudden, out of nowhere, we see a one-day wonder where all the money starts taken out of the smaller, thinner traded and moving into the large cap, mega caps. They're using that kind of as a cash holding position. They got great balance sheets, and if there's any risk, why not just put the money into Facebook and Google and Apple and the names that we're well aware of? And that's what we saw yesterday. And then today we come in and we see a little bit of a downstroke on the markets right now. The Dow Jones Industrial Average Futures down to 217, ES down 24, and the Qs down 68. We did see Bitcoin dropping below the 30,000 overnight. It kind of went into, I think, 29,000 and change, I believe it was, maybe even a little bit below that last night. Economics, no material change. Employment, we're approaching the 1 million unemployed or initial claims of unemployment per week. Again, that was expected. A lot of it from the leisure, travel, hospitality industry, restaurants, bars, etc. Layoffs after they thought things were going to get a lot better. But once we saw that pandemic start to kick up again, and there was further lockdowns in a lot of places around the country, and then the questions about where are people going, people saying, you know what, I'm not going out until I get the vaccine. Don't forget, the vaccine, now we're in the point where people are saying, you know what, I might as well just wait to get the vaccine. People, we'll call it the 40-ish range and above of age. Some younger too, but yet the younger people are taking it a little bit less seriously because they know they have a much longer wait. But if you have maybe a 3-week, a 4-week, or even a month or so wait, like, hey, I've done this so far, it sucks, but I'll wait a little bit longer till I get that vaccine. Then I'm going to go out and party. And I think what's happening is we have a little bit of an Osborne effect, which is, look that up. That's something that happened with the computer industry back in the day where there was an announcement that something was coming and everybody decided not to buy the current computer that was on the market because they were going to wait until that came out. And now we have this Osborne effect with the with vaccines where people are saying, you know what, I'll wait. Let me wait a little bit longer. I'll wait till I get the vaccine. Then I'll go out. Why should I risk anything right now when it's just right around the corner? I see the finish line. Let me get there. And then what I do is go out and party from there. In addition to that, in the economic space, Yellen, who is now the Treasury Secretary, came out and said, hey, you know what? We need more stimulus. You know what? Don't worry about all the debt that we're accumulating right now. Just do more stimulus. Get this economy back. We'll worry about the overhang and the hangover sometime later on. That was kind of bullish for markets. Last week, we talked about the next 7 days. We talked about, well, what was going to happen. Smooth transition. We could question that. Well, kind of a smooth transition. Nothing seemed to happen. High alert on civil unrest? No, nothing happened there. Biden administration priorities? Well, yeah, there was massive execution of executive orders and signings on the day that he was placed into office. Rolling back a few things, opening up a few things, stopping the Keystone Pipeline, stopping the building of the wall. A lot of these things that were part of the campaign trail. The KRI is at a +2. I think that's where it was. Yep, +2. So markets are, generally speaking, from a very broad-based standpoint. And again, when you look at this, we only put the SPY in there. The SPY is the only market indicator that's used. You put anything else in here, this will not work. One symbol, that's it. It doesn't look at anything more than a very big picture. It's looking at what's going on with markets, what's going on with psychological indicators, what's happening with momentum. It puts it all together and gives us some readings of, well, is it too hot or is it too cold or is it just right? So right now where we are and where we've been for some time is in an overheated, slightly, very slightly overheated, but near equilibrium. And what that means is usually that the trend will continue until we see something very significant break. Oftentimes you want to look at areas inside of here that will find, for example, these areas these peaks and reversals with clusters. So you got these clusters, and then this drop. Right now, we don't see that. There's just nothing there. That doesn't mean we can't see a move lower on markets, but right now we're not seeing any major amounts of overheating. The one thing that is kind of interesting is the put-call ratio has been some of the lowest ever. In other words, people buying calls, not puts. There's a lot of exuberance, a lot of euphoria, a lot of bullish tendencies out there right now. What else do we got? Earnings. Well, we had a bit of a sell the news on earnings. We should see what happens. Economics, which we talked about some of this. Next week, we have durable goods, FOMC rate decision, fourth quarter GDP, first look, personal income and spending, and I don't think it's actually first look. I'll have to look at that. I don't know what's happening every day. Click here. We're going to talk about these stocks, and I'm going to make sure you know about this. Listen, this is really important. Anyone who does have a new subscription to the Commander Series will get a free 4-hour training course, online coaching. Do it at your leisure. That is a green, basically, I would say an evergreen type of program that we put together a few years back, but basically it's good for all of us to understand everything about the whole area of market profile and volume and breakouts and consolidations and all of that. All right, so let's get into some of this. This is what we're going to look at here is basically the Commander Series that you get, except for, I'm going to take this off, what you get when you open up your new subscription or your regular subscription to the Commander Series. Essentially what you get here is something that looks like this. You get 2 charts. You can add charts if you want. And on the top here, what you get is a multi-time frame radar screen with autopilot. It gives you the bias all the way from the right, which is weekly, daily, 240. You can change these up, by the way. But right now we have them set for 30, 60. See the top line, 30, 60, 240, daily, and weekly. And what it gives us is a really good idea of looking from right to left. I teach you this all the time. I'm going to make sure that you're brainwashed with the understanding that we're going from right to left. Always looking from right to left when we're doing things. And what you want to do is you want to say, okay, weekly, where are we? We're long. Daily, where are we? What's happening on a 240? What's happening on this? So I could see that the QQQs, there was a long profit that was taken on the 30-minute yesterday. But generally speaking, what do we have? Well, we have an 11-day over here, 11-week long, a 2-day long. We have 240. So we are generally seeing that the long-term trend is up, meaning that there's some really good power behind this. Well, let's take a look at some of these. First, before we do that, I want to mention this. This is the stock that I talked about that everybody got wrong. What I mean by that is Elon Musk mentioned, remember? Hey, everybody use Signal. Everybody went for this stock thinking that it was it. It went from 70 cents up to $70. And then it crashed down. Still trading at about $6.56. I don't know why it's not going to come down. I do not think that you can actually get a short on this. But nonetheless, something we've been talking about is SPCE, really interesting space, which is Virgin Galactic. We have a long alert on this on the weekly that just kicked off. Nothing else really in between. You see the daily is in a consolidation, but we do have another flag pattern that's here. Again, very easy to draw this. You can just take any drawing tool that you want. And actually, let me take this. You take this, you look here, you know, kind of that flag. And then usually the flag pattern will be a continuation. I don't know why that's so thick. That's kind of ugly. But let's clear that. Let's go back to this drawing tool. This one. Yeah, there we go. Kind of get this flag. Usually what you do is you get this continuation program, or usually with that. And if we get above, I would say right here, which is kind of like the, you know, the 33.75 level, that could be a good opportunity for this thing to, excuse me in advance, blast off. Personal space travel is something that's being pretty exciting these days. So that's kind of interesting. Netflix came out with earnings this week. You know, you can see this was, you know, what was really interesting about Netflix was long-term consolidation. Again, you take your box tool that you have and you can kind of draw some very key levels here. And you can see, let's get down to where it is, that there was some very key levels that you get multiple times that you crossed over, multiple times, or I should say intersect, where you could draw a line that intersects many of the lines in the altimeter, and then you get this blast off to all-time highs here on Netflix. Kind of an interesting chart right there. You know, if you want to look at it too and see, hey, this is like a really long flag. What happens when you get those consolidations is that if you can't get above or below, and this is a wide range, 530 right here to down 480, but when you can't get above or below those range for a long period of time, what's going to happen is it's like a spring being, you know, wound up, and then all of a sudden it pops and it goes either up or down, either way pretty dramatically because one side or the other is wrong and they're giving into that. They had some good numbers coming out with also the idea that they do not need any further outside financing to do what they're doing in terms of the production. Talked about GameWorks, 43.85. I still think this is a long-term short. Down at 20 would be interesting, probably 22. I don't foresee this getting, I foresee this potentially having a lot of upside, but I don't know. I wouldn't play it. I don't think it's whatever. We've talked about this many times, this workhorse, that we see these kind of moves, these ups and downs, this consolidation over a long period, these kind of ranges where it breaks out, then it comes back into it. Right now, we're seeing that consolidation back into this. This is kind of an interesting chart because if you look at it, you know, it kind of went long on a breakout here on a new bar. Kind of a weird looking chart, actually, on terms of the coloration. I'm going to put this back on. We see the momentum starting to roll over. That's very true. I do think there's going to be some support here. You're going to see this back and forth. They're looking for a contract with the post office. When that happens, if it happens, I think this could be really interesting. I'm going to take a couple of stocks from you. NTLA. NTLA just called a short. Been a really good winner for a long period of time. Had a really nice short here called yesterday. Or the day before, I guess that was, day before. At about 83 down to 72. IntelliTherapeutics, I mean, all these CRISPR stocks have gotten whacked. You look at also like Edit, which we talked about many times, you know, just kind of got crunched right there. CRISPR, I'm not sure exactly what's happening in the industry, holding up a lot better actually, down a little slightly today. This is my preferred stock is CRISPR in this area. Nice takeoff here, nice long-term chart. It looks amazing. You look at this and we switch this over to weekly. I mean, just, you know, beautiful move on the upside from the $85, $90 breakout all the way through, holding on a weekly long position. Somebody is asking about RTY. Oh, the small caps? Let's just do IWM. Okay. Oh, IWM. We could do RTY, I guess. $ art. Is that what you want? Who is that? Sam, you want RTY? E-minis, this is what we're looking at here. Let's just get our time frame straight here. Yeah, time frame. So the E-minis have been doing really well on this, getting towards a nice level of support. Still very questionable because when you look at this and you look at where we are, you start getting below the level of, I would say, yeah, about 2080, you start getting into a range that's really problematic. This whole area that's dark, nothing there, nothing filling up our area, nothing to the left, always looking left, nothing there. You know, you got good support, not good support. You have support. It's not good support. At about 2085, I would call it. You got some support here, down about 1% today in the pre-market. I don't necessarily think that if the banks don't hold up, you're gonna be good here. Don't forget a lot of energy in banks and financials and regionals, small ones in here. These had a great run since November. Obviously, incredible turnaround. You see that bottom, that move off the bottom, that kind of just skyrocketed this turnaround trade. I think value has a lot of potential legs here, especially if we get rid of some of the regulation. So I think that's kind of interesting. Intel. Somebody's asking me about, Intel got some good things, down about 5.5% today. Really weird, the announcement last night with their earnings. They were up about 5 or 6% on the earnings last night. Right now, they're clipping down, taking back pretty much everything from yesterday. They came out with earnings early. They said something about a hack or something like that they released their earnings. I don't know if they were hacked and they released their earnings, or there was a hack, so therefore they early released their earnings. I'm not sure what was going on, but basically there was something about a hack and something about releasing earnings early. So they released it in, before the 4 o'clock hour, before the 4 o'clock close, which is usually they do it after the fact. Intel is looking good. A little bit of a question right here, down to 54 again, potentially. I just, I would say this is kind of a range that I would look for to get it back to, especially with questionable earnings. It's just nothing up here. See this kind of blank area? It's just nothing there. We got that popping through and that move up. We got some change in management here. I don't know. Not very excited about that. It's going to be a while till they really turn this around. Question about what's the best way to day trade the NQ. So if you don't want to trade options, you can do the QQQ. Okay, that's one. You could use the QQQ. It's a high price, but okay. There's TQQQ. If you're day trading only, there's a triple Qs. I think there's the triple Qs. These are double Qs, I think. And there's SQQQ. Yeah. This could be the triples. I guess the triples. SQQQ, TQQQ, S, and QQQ. So there's the best way. If you don't want to do that, you can trade the Qs right now. You're trading the contract, the March 21st contract. So you could trade that. It obviously requires a little bit more patience and lack of emotions because these move around pretty well. So you could use ETFs and you could use futures. There's also the mini futures that you could use, which is, I always forget the symbol on this. Anybody remember the mini futures, NQM? Nope, that's not it. Anybody know the sub-mini, the micro futures on that? MNQ, thanks. I don't know. Somehow I have a mental block on that. I guess I'm an old school guy. These are kind of new. MNQ, lot less overall money. There you go. It's kind of same, but trading, you need a lot less margin on this, and you can buy it at smaller amounts. So MNQ still trading the March, by the way. Thank you very much. And then somebody else had something else on this list here. CODX. What is this? Co-diagnostics? I don't know anything about it. Get an overbought situation here. This is a lousy looking chart. I mean, look at this chart. It's a lousy looking chart. I mean, a lot more gaps down and moves and gappiness. I would assume this probably doesn't have a lot of volume trading on this. Looks like you got probably room up to about your 1230, where it was, dropping back a little bit today. Hard overhead right here. Look at this. Draw a line because you got two things going on that's kind of interesting right here. Number one, when you look at this, first of all, you have a couple things. It's really important to know. Look how close this red and the green line is to each other. What that means is that you're seeing that there is a significant amount of volume at that level that is important to understand. The closer they are together, the more you have for a harder resistance or a harder support level. In this case, it's going to be a harder overall support. So let's move right to the middle. 1230. Could you see it move up to that? Yeah, possibly. I'm not seeing a lot of stuff here besides kind of a downstroke, a little bit of up, not a lot of conviction in the momentum. Then a big move off the bottom of the last 3 days. I don't know. I'm not exactly excited about this. DM Desktop Metal. This is another 3D company. If you've been watching what's going on, I think this is really interesting. Look at this kind of range that you got. You got above this 2540 or so. Right now trading at about 2367. Got up to there yesterday. Look at that. Poked right above it. Just poke. Tried to explore and tried to see if there's a way to get over there and failed yesterday. So we got a failed attempt. I'd keep an eye on this. I think it's really interesting. TAN, we've been seeing where this is going lately. Obviously, this is the solar energy. and the solar energy has been on fire. Fubo, be watching this, a little bit of a head and shoulders pattern now. If that is the case, we got this head, we got the shoulders here, right? We got a shoulder. Let's do a quick drawing. We got the shoulder right here. We got a head right here. We got another shoulder building a little bit on. Where's it go from here? I mean, usually you're going to see another move down somewhere to the 15 range. We'll see a lot of upgrades in this stock recently, so there's something going on there. We're going to end it right now, and I want to thank everybody for joining me. Make sure to go over to TriggerCharts.com. Make sure to, I'm going to put some links in here, over the developers, the TradeStation area for the App Store, and get your 10-day free trial. Any questions you have, support@TriggerCharts.com. Thanks so much for joining me, and I will see you again next week.